we will do the ledger accounts and then we will do the note for equity. So if we look at the information provided, on 1 March 2018, 300,000 ordinary shares were issued at R2. Okay, that date is long before our current financial year. So the first thing that I will do, I have to calculate my opening balance. If I look at the second one, on the 30th of September 2020, this was also before our current year. And the third one, 1 April 22, I can see is in the current year. So first of all, I have to determine what is the value of my share capital at the beginning of the year. So I will multiply the 300,000 with 2, and that will give me 600,000 Rand. And then I will multiply the 200,000 with R2.50. That will give me 500,000. So my opening balance is 1.1 million Rand. Okay, then we issued on the 1st of April, at R3 each, 200,000. Now that's in the current year. So I will show on the 1st of April, 200,000 was issued and my capital increased with 600,000 Rand. And then on the 30th of November, 100,000 ordinary shares were repurchased at R2.80. So it means that I have to go and work out what is the average price first of all. So if I look at the amount paid, it means in the bank, I will show 100,000 times R2.80, and that will give me a total of, so just multiply the 100,000 with R2.80. Okay, so did you get 280,000? Okay, that's what we will pay. Now I want to know what's the average price. Okay, so I look at the money value, 1.1 million. And I look at, there's another 600,000. So it's 1.7 million. And I divide the 1.7 million with the number of issued shares. And there was 500 plus the 200, so I must divide it by 700,000 shares. Okay, so the total amount is 1.7, and I divide it by 700,000, and that gives me R2.43. Okay, so the average price is R2.43. And I multiply that with 100,000 to see what is the total amount. So 2 times 43 times 100,000, and that will give you 243,000. So the average price is 243,000. That is the figure that will go to my ordinary share capital account. Okay, the difference between the 243 and the R2.80, I will take the R2.80, subtract the R2.43, and that will give me 37 cents. Okay, so then I will multiply the 37 cents with 100,000. So I will again work out what is 100,000 times 37 cents, and that will give me 37,000 Rand. And the amount above the average is the amount that will go to retained income. Okay, add up and ensure that you get 280,000, that you didn't make a calculation mistake here. Okay, so that's the first part, is where I work out what was the opening balance, what's the additional shares issued. Then I have to go and work out the average price so that I can put the average price in the ordinary share capital account, and the amount above the average price will then go to retained income. Okay, if I look at my retained income account, the opening balance is 92,400, and they give you the net profit after tax is 604,800. Okay, then on the 31st of August, there was a dividend declared of 20 cents. Okay, so I first have to determine what is the amount that we will pay out for that dividends. Okay, so that one was the 37,000. I've done two retained income accounts because I just want to explain the difference between the two, because all the schools don't use the same method. There's two methods and you will get the same end result. Okay, the dividends is 20 cents on the 31st of August. This was issued on the 1st of April, so it means that we had 700,000 shares that we will take out 20 cents, so that will give me 140. Okay. So 700,000 shares times 20, and it gives me 140,000 rand. Okay, then the final dividend was 40 cents per share. Okay, now the final dividend was after we repurchased 100,000 shares. So it means now we don't have 700 left over, we only have 600,000 left over. And on that we will pay 40 cents, so that will give me 240,000 rand that I can pay out for dividends. Okay, then I must remember that the total dividends that I've got here will be shown in my ordinary share dividends account. And I will first show the 140,000 and then the 240,000 to complete that double entry. Then the amount that I will have to take to the retained income account will be this added together. So I will take to retained income 380,000 rand, and that is the amount that I showed there, the 380 in retained income. Okay, so this dividends will go to my appropriation account as 380,000. Okay, my net profit is 604,800. Okay, the income tax they don't give me, so I have to calculate the income tax and work out the total income tax that will go to retained income. Okay, so look at your appropriation account, and then you go to the 840,000 and you on that profit and you calculate the tax for it. Okay, that was the net profit after tax was 604,000. So before tax, your profit will be 100%. The tax is 28%. So the amount after tax will be 72%. They give me the net profit after tax. So it means this one is given, the 604,800. So if I want to know what is the tax, the one that I want, 28 divided by the 72, and then I can calculate the income tax. So it's 28 divided by 72 times 604,800, and that will give me 235,200. Okay, so this answer is 235,800. Okay, 235,200, and I've put that in. Now, if you look at this figure here, the tax that they've given to me was the profit after tax. I have to put the tax in the appropriation account, the amount before tax. So it means I have to work out here what is my profit before tax. So it's 100 divided by 72 times 604,800, and then I calculate the profit before tax. So 100 divided by 72 times 604,800, and that will give me 840,000. So remember, there's a difference between these two accounts. The amount that you take to retained income is the net profit after tax. The net profit that you take to the appropriation account comes from your profit and loss, and that's your net profit before tax. Okay, if I look at my retained income account, I'm going to do this one first. It means that you will close off the retained income and you will transfer to your appropriation account 55,400. Okay, so I have to add up my retained income account, and that gives me 697,200. And if I take that and I subtract these figures, then I can work out what is the balance in my retained income account. Okay, in this one, we closed the retained income account after the appropriation, and we said the opening balance for retained income is given to you as 92,400. So if I take the amount that was paid, it means that I take that figure to the appropriation account. So it's 55,400. And then I have the same total on both sides. Okay, so the figure that I calculate here is the one that I will take to appropriation. And then I go and I add up the credit side, and the total is 895,400. And I subtract the figures on the debit side, and that gives me 280,200. So that is the retained income at the end of the year. Okay, so this figure will then go to retained income as 280,200. So in this first method, you will close off after you paid back the money for the repurchase of the shares, and you will transfer that figure to your appropriation account. The other method that you can use is you take your balance, then you don't take it to retained appropriation account. I show what is the amount, what is the dividends, and then by balancing, I will calculate what is my retained income at the end of the year, and that will also give me 280,200. 697,200, and this balance is brought down. So it means whether you use that method or this method, the end result will be exactly the same. So use the method that you are used to in the school, because both methods will be marked correctly. Okay, if we go to the notes that goes with the financial statements, it means that for the authorized share capital, I will never show any figure. They told me there's 1 million shares that's authorized. Okay, issued was the 500,000 at the beginning of the year, and that gave me 1.1 million. Okay, then during the year we issued 200,000 at 3 rand, so it means my capital increased with 600,000. Then the amount that we will show as capital decreasing will be the average price, the 243. So I will show that that decreased with 243,000 rand, and then I can work out my closing balance as 1,547,000. Okay, the retained income, I will take my opening balance is 92,400. Then you look at your net profit after tax, and the net profit after tax was 604,800. Okay, so remember the one that transferred to retained income must be afterwards. Then the repurchase, and this is the amount higher than the average price, and that was 100,000 times 37 cents. So we've taken 37,000 rand from our retained income, and the reason why the business are prepared to pay that extra amount is that retained income also belongs to the shareholders. So this profit that was kept back in previous years, some of that profit belongs to the shareholders. So they're not only going to take the average price, they want some of this profit as well. The other reason is they want to reduce their accounts, so to motivate the shareholders to allow a buyback of shares. They encourage them by telling them they will pay them out some of the profits. Okay, the dividends on the ordinary shares, you have to look at your dividend that was paid in the middle of the year, and then the dividend at the end of the year. So the dividend in the middle of the year was 140,000. That was declared and paid immediately. Then the dividend at the end of the year is 240,000. This was not paid. This was just recommended. So the amount that I have to show that will decrease my retained income is 380,000 rand. And then I can work out, if I take the 92 plus the 604 minus 37 minus 380, so the retained income at the end of the year must be 280,200, and that must be the same figure that you calculated in your ledger accounts. So if you understand the ledger, it will be easier to do the notes that accompany the balance sheet.